We couldn't shield ourselves from interest expense, but there is a segment of Kenyans we said we will not pass the interest expense. Beginning of last year, our risk-based lending was approved. We could have adjusted consumer lending, salaried and payroll salaries, but we chose not to subject Kenyan workers to the headwinds. The payroll lending, consumer lending, if you call it, constitute 32% of our entire loan book. Anybody who had borrowed as at January last year, they are still paying at 13%. When if you borrow today, you pay 24%. That is the generous heart of Equity Bank. When we talk about caring financial partner, Equity practices what it says. And so when you hold 32% of the entire loan book at 13, when you hold 50%, 500 billion, 40% of the balance sheet at 11%, it means 70% of earning assets are earning below 13%. Weighted average between treasury bonds and consumer loans is 11%. But we are funding that loan book at deposit at 18%. And that explains to you why you'll see cost of funds, we are above the market at 18%. Yields, we are below because of subsidizing consumers. But we take pride that the civil servants, the teachers, the salaried people are able to take care of their families because Equity has stood with them during these high inflationary times and when the Kenya shilling has shown signs of weakening against the dollar. It's something we take pride of. It's what the foundation then takes to the next level, and we all know what Equity Group is doing. Profit before tax of 43.7 compared to 46 last year, 5%. We have provided an umbrella to our customers. The debate was, what do we do with the shareholders? So the board, in its wisdom, resolved to give the shareholders a record dividend of 15 billion shillings. That dividend is 4 shillings per share. The dividend payout is 36% of the entire 43.6 billion has been given to the shareholders. Dividend yield, 11.9%. But more importantly, is the dividend yield on par. The equity share that we said is paying 4 shillings. When you bought and paid the price, the only amount of money that came to Equity as capital is 5 cents. The par value of the share of Equity is 5 cents. And for 5 cents that you paid, you are getting 4 shillings per year. And as you can see, even last year, the shareholders were paid 4 shillings. It's sustained record payment of dividend, predictability. Shareholders, like customers, can count on Equity Group. We have seen the inflation has started showing signs of being tamed, but stubbornly remaining high at above, on average, 3% across the world. When we come to Africa, in midst of all this, Africa has emerged, and specifically East Africa, has emerged as one of the fastest growing regions in the world. In the top 10 countries, we have Tanzania and Rwanda as two of the fastest growing countries. If we expand that to 20 countries, Uganda joins the rank. And if you extend to 50, then you get Kenya, DRC, and South Sudan joining the rank, making, giving a region whose countries are all in the top 50 fastest growing countries. And again, that shows the momentum. When you look at the characteristics, then you see maybe this growth will be sustained for a long time. Why? Because it's fueled by foreign direct investments, and the region has become the second largest recipient of foreign direct investment on the African continent. We see a significant upside opportunity as a result in East Africa, and we feel Equity Group Holdings is uniquely positioned to step into this growth, not just to drive this growth, but to benefit itself, to be fully transformed, and to significantly reward its stakeholders. May they be staff, may they be shareholders, may they be depositors, may they be lenders. When you look at the entire region, 63% of the entire population of nearly 380 million is below the age of 24. So if you take that as a consumer, it's a consumer that can be a customer for the next 80 years, given modern science and modern medicine, and the fact that lifespan within the region is growing. More, again, DRC stands out. Whether you talk about energy potential, clean energy, whether you talk about strategic green minerals to power clean energy technologies, whether you talk about hydro, whether you talk about Alabolad, DRC stands out. And of course, when you look at the financial sector, banking has done well. Penetration is reasonable, but insurance penetration is still at the range of 1%, and the headroom of 99 gives us a huge opportunity as a group to grow. This is a region that has adopted technology, and if you look at the mobile penetration, and particularly if we single on Kenya, which mirror the other countries, we have 124% penetration. We have more mobile phones than the population, suggesting that adoption of modern technologies. But it's not just this region is endowed, but this region has proactively positioned itself to be an ecosystem of trade connections. This is the most integrated region on the African continent. The common trade area has really been adopted. And if you look closely, you'll see Uganda is Kenya's largest trading partner. And you can see Tanzania is not far, Rwanda is not far, and we can see the countries are trading with each other. Given then Equity Bank in that region is number 1 or number 2 in 4 of the countries, and particularly the 2 largest economies, Kenya and DRC, it demonstrates how well Equity Group Holding is at the heart of East African thriving ecosystem of trade connections. And Equity has been proactive, facilitating trade missions in between these countries to make it a common market and ensure our business people are faced by a 380 million people market other than the country population. We're the largest country in sub-Saharan Africa also presents a new and exciting frontier of continued sustainable growth for Equity Group Holdings. And this is what we're saying. Strategy has been positioning equity to be at the center and the heart of this formidable transformation that is happening before our eyes. I'm pleased to inform you that equity is 27% of the entire banking industry in DRC. What it means is that for every 10 customers in DRC, 3 are in equity. The endowment of DRC, then we see how well equity is positioned to be a catalyst of transformation, whether it's value addition in the mineral resources, whether it's in the agricultural transformation of the world's powerhouse, whether it's in development of energy, hydro, whether it is tapping into the 15-year manage 100 million population, and of course, the headquarters of equity being in Kenya, strategically positions as at the gateway of entering East Africa. Kenya's elevation in terms of human skills, Kenya's elevation in terms of social investment, particularly energy, education and health, a very skilled human capital, a functioning civil service, elevated infrastructure development, interconnectedness with the landlocked countries, position equity's headquarters at the core and at the center of what things will happen. If we look at equity specific as a group, equity has now emerged as a premier regional financial service provider. It's no longer the Kenyan banking leader. We see that there is significant transformation, and we can see the impact in terms of what equity has become. A 1.8 trillion balance sheet that tells you the largest regional banking customer base, branch network, deposit base, with very efficient operations, cost-income ratio of 52. We see organic and fast-tracking that through mergers and acquisition, and we can talk about the latest acquisition in Rwanda that has converted equity in Rwanda to be an 18% market share financial group in that country. When you look at 27% market share in DRC, 18% market share in Rwanda, 14% market share in Kenya, then it speaks of how significant equity has become. Despite all these and being the largest balance sheet, we see the group continuing to grow, deposit growing at 29%, speaking to the customers' preference of Equity Bank. Deposits is a choice of the customers who to deposit with, and when your deposit grow at 29% during difficult, turbulent period, then it means the brand is not just celebrated as the strongest banking brand in Africa, second strongest brand in the world, but the customer growth in terms of deposit acts as a huge testimony. When you look at our customer, human capital, and brand, as we have said, we take pride of being the owners of the strongest banking brand on the African continent, second strongest banking brand on earth. We take pride because that is a reflection of who we are, what people say we are, how people regard us, and how people hold us And that is because of who we are. That speaks of our governance structures. That speaks of the quality of our human capital. That speaks of our systems and our processes. But more importantly, speaks of our governance structures that build that trust. And you can see during very difficult times, the number of customers in the bank grew by 10%. That again, an incredible vote of confidence, driving customers' deposit by 29% and loan book by 26%. So an organization can never be better than the quality of its people, and we take pride that we are the best second blood on earth because we have some of the best human capital anywhere in the world. As a result, we have been able to build a sustainable financial ecosystem. We have been talking about it, but now we have the banking group in 6 countries and a rep office in the 7th country, that is Ethiopia, and waiting for its doors to open, knowing that Ethiopia is one of the top fastest growing economies in the world. We have Equity Insurance Group projecting by the end of June to have a life insurance, a general insurance, and a health insurance, completing the entire offering of health so that we can protect lives, we can protect health, but more or equally important, to protect the wealth that we have helped to build so that growth becomes sustainable. And of course, we all know about Equity Group Foundation, which has become increasingly bigger and that is shaping the blood of the group. And now Equity has evolved from the brick and mortar infrastructure to now be on a technology platform that has allowed us to digitize our business, to become an online business, to compress time and distance, and more importantly, to give our customers the power of control of their money. This has then led to positioning ourselves to grow with the East Africa of tomorrow. We truly believe that if East Africa is the fastest growing region in the world, the East Africa of tomorrow will look very different from the East Africa of today. And we take pride that we took a proactive strategic decision to position ourselves at the heart of that entire region. And now we have strategically positioned ourselves to grow, to be the bank of the East African of tomorrow. With the largest capital base in the region, the largest customer base, the largest balance sheet, and being systemic in all the countries in the region, being in the top 4 countries except one, it shows how Equity has positioned itself to drive and to benefit from that unique position and the opportunity of rapid growth. Equity has also equally transformed itself into a unique financial services platform with exposure to attract East African market. So it's no longer focusing on one country. It's looking and recognizing the opportunity that the East Africa of tomorrow will generate, will create, and saying we want to be in the driver's seat, we want to be a catalyst, we want to be an enabler, and we want to have the capacity and competence. And Equity's credentials have been proved by the last 7 years, since 2016, when we went through the interest capping challenge or shock, went to COVID, went to Ukraine, Russia war, We went all through to disruption of global supply chains. We went through the current macro, and yet equity is emerging stronger, resilient than ever before. I want to, when you look at return on asset in each of the markets, leading with Rwanda, where we have the most efficient operations, South Sudan at 48, Rwanda at 39% return on equity, 26 in Kenya, DRC 21, and the group is essentially 22. We can see that the performance is well spread throughout the countries. Equity group holding is no longer challenged by a single sovereign risk. Its sovereign risk is now spread fairly well among the 6 countries within which it operates.